You've been beat down. Precious metals investors have endured a lot. You deserve some good news. But unfortunately, do we have to hear about some doom and gloom, some real catastrophes developing in our economy, for that to be good news for the price of gold and silver? We don't like what's going on, but we need to talk about some scary situations because Bloomberg reported we could see a 1% interest rate cut from the Fed as early as next year. It's a big story, and we're going to wrap around to that at the end of this video. Why Double Line Capital is predicting that we could see a 1% rate cut. We know what that would do for the price of silver and gold. It would send it to the moon. But for that to happen, unfortunately, we need some gloom, and we've got plenty of that. We can talk about what the ex-CEO, the founder of Home Depot, a legend, what he's saying that is very frightening about the U.S. economy. Let's head over to Europe as well and talk about Europe's largest airline. What are they seeing? Are they happy about conditions in the European economy? And how will that relate to the United States? Let's get started first with a story out of Fox Business. Home Depot founder, former CEO says U.S. businesses have more uncertainty now than any other time in 50 years. 50 years. With economic pressure at the forefront of voters' minds, one American business leader warned that President Biden about being overconfident on U.S. fiscal health. Quote here, "I've been at this for 52 years, and I think that I see more uncertainty now than I've ever seen in our country in running corporations across a broad sector of businesses." That's former Home Depot CEO Bob Nardelli. He said that on Fox Business. This guy is super respected, and he's super scared about what he sees out there. And again, guys, when all this comes home to roost in the next 6 months, the Fed's going to have to take action, drastic action, as predicted by Double Line, which would be huge interest rate cuts, and we can only imagine what's going to happen to the silver price and gold price when that occurs. Next up, CNN Business reports Europe's largest airline, Ryanair, sounded the alarm on travel demand. Sounded the alarm. Ryanair, Europe's largest airline by passenger numbers, warned on Monday that high inflation and rising interest rates could dent appetite for travel in the second half of the year. But it gets even more frightening the further we read. Quote, "We're concerned about the impact of these macroeconomic trends," CEO Michael O'Leary said in a video posted on the company's website, adding that they, quote, "might affect consumer spending in the second half of the year." Now, this is where it gets interesting. Last year, O'Leary shrugged off comments about the impact of Europe's expected economic downturn on Ryanair's business, calling them overblown. So last year, he was quick to say, hey, we got nothing to worry about, everything's good. But suddenly now, just 1 year later, they're sounding the alarm on the European economy. Everywhere, right? All these economies are interconnected, especially Europe with the United States. We also got horrible economic news this week out of Germany, likely headed into a recession. Germany is a very advanced, very sophisticated, and very large economy. We don't give it enough credit here in the United States. They're all connected, and things are starting to slow down. Let's just jump over to the banking sector because we know it's a huge mess. We know commercial real estate is in big, big trouble in the United States. We know the balance sheets of the banks are in big trouble because they bought a bunch of bonds over the last 10, 15 years that are now much less valuable. But let's talk about something even more scary in the banking sector. Fortune magazine says uninsured depositors remain a ticking time bomb. I'm not making this up, for the U.S. banking system. The failure of 3 sizable banks in March and April exposed major weaknesses in bank regulation. Yeah, you think so? Who did what to whom and when, a favorite Washington game, is currently being played out. What has received less attention is the major role that uninsured depositors played in these bank failures, and how uninsured deposits remain a major source of instability in the U.S. banking system. Because uninsured deposits are currently around 40% of all deposits. And I want you to think about something right now. FDIC insurance supposedly covers deposits up to $250,000. That means 40% of the money deposited in banks is held by people with more than $250,000. I just have to ask the question, where are these people coming from and what are they thinking? And these uninsured deposits are lurking as a problem for banking stability, especially in an era of online banking. This gets real interesting. Uninsured depositors are almost always slow to recognize the financial problems of their banks. But, and I like buts, and this is a big but when they do, their reactions are fast and massive, and their withdrawals may well inspire large withdrawals at other banks, with highly disruptive consequences for the U.S. economy, and contagion risks are real. Because in this day of electronic banking, all people have to do to pull all their money out of any bank is hop on their phone, press about 7 keys, and they can move the money. The old days of the bank runs when you had lines of people around the block, they're gone. Now people are on their phones and they can destroy a bank in an instant. It's a real major risk for our economy. So as we look at all these situations, we look at Ryanair, we look what the founder of Home Depot says, we look at problems in the banking system. Can we see a situation like Double Line Capital pointed out, where the Fed's going to have to make massive rate cuts, and maybe sooner as opposed to later? Let's go over to Bloomberg, who reports on this. Deep recession to force a full percentage point Fed cut, Double Line warns. Now, let me remind you, Double Line is a large firm, $76 billion under management, headed by Jeffrey Gundlach. Super respected, one of the smartest guys on Wall Street. Markets should brace for a deep U.S. recession that warrants a dramatic 1 percentage point interest rate cut by the Federal Reserve and our old friend Jerome Powell, warned Double Line Capital's Jeffrey Sherman. It's a bold call based on weakening economic data that makes a recession probable next year for Sherman, coming even as the Fed is expected to hike rates this week. Money markets are already betting that next year we're going to get a 1.3% cut out of the Fed. But Sherman thinks policymakers will end up being slow to act and then have to unleash the biggest cut since the pandemic struck. Quote, this is him. Listen when you're thinking about the economy. Listen to this. A multitude of economic indicators we look at are flashing either warning or recessionary signals, said Sherman, Deputy Chief Investment Officer at Double Line, blah, blah, blah. By the time they cut, he says, it will be 100 basis points. And the Fed knows this is coming. There's fights going on within the Fed between the hawks and between the doves, but we also know that our old friend, Mr. James Bullard, who was the hawk of the hawks, right? He really killed silver and gold for us over the last few years. He conveniently resigned from the Fed and did it just before this most recent Fed meeting in July. It's going to be interesting. But when I look at the big picture and when I look at what Double Line is saying, I have the utmost of respect for Jeffrey Gundlach. I see big cuts coming sooner as opposed to later, and those big cuts will be rocket fuel for the silver price and the gold price. We know it should be much higher. I know you'll come back to Ron's Basement. I'll look forward to seeing you. Why don't you think about going to watch a live stream?